Hello everyone, welcome to Drishti IAS. You're watching the Current Affairs Plus series and today we are going to discuss on the topic of Finance Commission. So let's first see why Finance Commission has been making the headlines. So the Finance Commission is in the news because right around the time the budget was being tabled in the Parliament, our Finance Minister Ms. Nirmala Sitharaman announced that the Union Government has accepted the recommendations of the 16th Finance Commission chaired by Dr. Arvind Panagaria. And the Commission has submitted its report for the period of 2026 to 2031. Now, one of the key highlights of the report is a shift from entitlement-based transfers to compliance-driven fiscal federalism, meaning that any kind of financial transfer is not going to be a matter of rights for the state, but rather will be based on how well the state complies with and follows rules, particularly those concerned with fiscal prudence. Now let's take a look at previous year's questions. A question was asked in Prelims 2025, which of the following statements with regard to the recommendations of the 15th Finance Commission of India are correct? The first statement says it has recommended grants of rupees 4,800 crores from the year 2022-23 to the year 2025-26 for incentivizing states to enhance educational outcomes. Now, as a matter of fact, the 15th Finance Commission did set aside certain grants that were performance-based. So these grants were performance-based incentives. And one such incentive was set aside for the states based on how well they improve their educational outcomes. And this amount was rupees 4,800 crores, as has been correctly mentioned in the question. Therefore, the first statement is correct. The second statement says 45% of the net proceeds of union taxes are to be shared with states. Now, this statement is erroneous, meaning that the 15th Finance Commission had actually recommended that the only 41% of net proceeds or 41% of the divisible pool be transferred to the states. Hence, this statement is incorrect. Now, if we eliminate statement 2, we can get rid of all options that consist of statement 2 and arrive at the correct answer, which is option number C. But let's also take a look at statement 3 and 4. So, rupees 45,000 crores are to be kept as performance-based incentive for all states for carrying out agricultural reforms. This is also correct because the Commission had recommended focusing on agri-marketing as well as modernization of agriculture. And for that, the said amount was set aside. Therefore, this is correct. Now, statement 4 says it reintroduced tax effort criteria to reward fiscal performance. This again is an accurate statement. Tax effort here implies the efficiency of states to mobilize their own taxes. All right. So the question here arises whether we ought to be aware of or we ought to memorize all the facts and figures that have been mentioned here. But the key to solving this question is statement 2. Learning this data, learning the amount of money that is to be transferred to the states from the divisible pool is non-negotiable, students. So this you have to remember at all costs. And once you're aware of this, you are practically able to solve the question. And we arrive at the correct answer, which is option number C. Now the next question says, consider the following. 1. Demographic performance. 2. Forest and ecology. 3. Governance reforms. 4. Stable government. 5. Tax and fiscal efforts. For the horizontal tax devolution, the 15th Finance Commission used how many of the above as criteria other than population area and income distance? Now, let's understand the key concept here, which is horizontal tax devolution. So, tax devolution, students, is of two kinds. One is vertical, the other is horizontal. Now, what is vertical tax devolution? It is the amount of money that is supposed to be transferred from the center to the states from the divisible pool of taxes, and this is 41% as recommended by the 15th Finance Commission, but also incidentally recommended and retained by the 16th Finance Commission. The other type, as we have mentioned, is horizontal devolution, and this has also been mentioned in the question. Horizontal devolution means that out of this 41%, how much money ought to be distributed among the states based on certain parameters. And some of these parameters have been mentioned in the question, but also 3 parameters like population, area and income distance have also been mentioned. These are a given. So for the 15th Finance Commission, the Commission had set aside 6 criteria or 6 parameters for the horizontal tax devolution. 3 have been mentioned. The other 3 were demographic performance, area, forest and ecology, and tax and fiscal effort. These were the 6 parameters, out of which 3 have been mentioned here, and these 2 did not find a mention in the category of parameters as suggested by the 15th Finance Commission. Therefore, only 3 of these parameters are correct, and we arrive at the correct answer, which is option B. Now we have already looked at the definition of vertical pool. We have also seen that it was retained at 41% even by the 16th Finance Commission. Now this divisible pool actually does not include the following, namely cesses, surcharges and cost of collection. Cesses are basically special fee that are laid for or levied for a special purpose. For example, health cess. Surcharges are nothing but taxes on taxes. So this again is done only during the times of emergency, all right, or some time of need. And finally, the cost of collection would refer to the administrative expenses that are incurred due to the collection of taxes. It involves your entire IT infrastructure along with the salaries, let's say, of the officials involved. All right. Again, horizontal devolution, we have already discussed, is the distribution among the states from the given divisible pool. All right. Now here is a comparison between the criteria of distribution for the 15th Finance Commission as well as the 16th Finance Commission. Now as you see, the criteria remain more or less the same with one change. Now income distance was given the weightage of 45% by the 15th FC, whereas the weightage this time is 42.5%. The question here is, what is income distance? Income distance is the gross state domestic product, the difference between the GSDP of a state and the average of 3 states with highest GSDPs. All right. So suppose there are 3 states that have the top 3 GSDPs. If you subtract the state in question, if you subtract its GSDP from the average of the top 3 GSDP producing states, then you get what is known as income distance. Then of course, population is also included, as in the more population, the more funds a state would require. The weightage has been increased to 17.5%. Another criterion is demographic performance. Now here, the devolution was based on the size of the population, but here it is based on population control. However, the 15th Financial Commission looked at TFR or total fertility rate to evaluate the performance of a state, whereas the 16th Finance Commission has looked at how much the state has been able to control its population between 2015 to 2023. And again, 10% weightage has been given from the 12.5% earlier. Again, area-wise, the weightage has reduced. Forest, the weightage remains the same. And the 15th Finance Commission included tax and fiscal efforts that we've also discussed in a past couple of questions. But this time, this has been removed and a new parameter of contribution to GDP with a weightage of 10% has been added. Now, contribution to GDP, the formula for it has been given by the Finance Commission as the square root of its GDP to the sum of square root of GDP of all states. Which means if I'm calculating the contribution of GDP by a state, or let's say GSDP for a particular state, then I have to look at the square root of the GSDP of a particular state divided by the sum total of the square root of all, or the GSDPs of all states. This formula will help you arrive at the GDP contribution of a given state. All right. So before we move ahead, there are also a few recommendations that we may look into that have been made by the 16th Finance Commission. The first one has to do with the privatization of the electricity or the power distribution sector, the power sector. So the DISCOMs should be aggressively privatized as has been recommended by the 16th Finance Commission. Second recommendation has to do with fiscal populism, meaning there should be a control or a rationalization of subsidies. Some sunset clause should be introduced, and that of budget borrowing, which is basically borrowing from unofficial accounts, should also be avoided. And then there is recommendation regarding review and closure of 308 state public sector enterprises. So these are also three of the recommendations that have been put forward by the Finance Commission, along with, of course, providing a fiscal roadmap, in the sense that the Commission has recommended that the states should reduce their fiscal deficit to under 3% by 2030-31, whereas the center should do the same, but they need to limit it under 3.5%. Similarly, so now this is discussed, let's go to the basics of the Finance Commission. So the Finance Commission is actually known as the balancing wheel of fiscal federalism in India. It is actually also known as the constitutional referee in terms of money matters between centers and states. It is a constitutional body mandated to be constituted by the President under Article 280, and it is constituted by the President every 5 years or earlier if there is such a requirement. It has 5 members, 1 chairman and 4 other members, and one of these members has to be the judge of a high court. Again, their tenure is specified by the President and they are eligible for reappointment. Now, this functions as a quasi-judicial body, meaning that they have the powers of a civil court. The functions of the Finance Commission we have already discussed, and they have been stated in a nutshell here. You may want to look at it. One important thing to remember is that the recommendations of the Finance Commission are not binding, but rather only advisory in nature. Finally, there are a few facts that you may want to look at about the Finance Commission. For example, the first Finance Commission of India was headed by Mr. K.C. Niyogi, the second one by Mr. K. Santhanam, the 15th, the preceding one by Mr. N.K. Singh, and the current Finance Commission by Dr. Arvind Panagaria. Again, the State Finance Commission is constituted under Article 243 every 5th year, and it reviews the financial position of the panchayats and the municipalities. I've also brought to you a practice question. Kindly take a look at it and send me your answers in the comment section. If you found today's lecture useful and if it made an impact on you, kindly press the like, share and subscribe button, and thanks for watching.
For more informative content, like, share and subscribe, and do not forget to press the bell icon to get the notifications.